Hello, hello everybody. Sorry for the little late. Oh, you're not able to see us. Let me change that. Up, yeah, up. It should be good now. Okay, hello everybody. Um, welcome, Guilhem, for today's workshops. Today's workshops will be a little bit different from the others. It will be not technical oriented, but maybe like high level and like looking at like Flowdesk and the future of DEXs. Um, at the hackathon, Yuri, during Yuri's talk, he talked about like thinking out of the box, and I think that it is important today during this hackathon to think outside box and to see what is possible to do while improving the computational power and also lowering the computational cost. So today we'll talk about how these two increasing and lowering computational cost and computational power will change the DEX. I think as well like Moody from Okobo made quite of a noise in the Starknet ecosystem lately. So it's also like a good opportunity to talk about it. So welcome, Guilhem. We'll first start, yeah, with a small presentation. So know that the stage is yours. Thank you.
Thank you so much. Thank you so much, and so happy to be here with you guys today, obviously. And yeah, without a doubt, we're quite bullish about the ecosystem. I'll first tell you a few words about Flowdesk, obviously, and I think decentralized trading is heading. To tell you a bit, a few words about this first. We are basically building a new kind of infrastructure to provide liquidity in crypto. And we do that through a concept that we call market making as a service that we think is radically different because it allows the token projects to use our trading infrastructure, connect all their exchanges accounts, provide themselves the liquidity and manage liquidity actively on centralized and decentralized exchanges. So today we cover slightly more than 80 centralized exchanges and cover 25 DEXs on the various number of chains, and obviously most of them being EVM compatible. So the way it works typically is the token issuer come with the accounts, provide us the API keys, or they rely on our managed account offering. They provide the capital, and on our end, we will provide both the custody side and the trading infrastructure, and we can manage the liquidity globally, whatever the exchange, whatever the pair, and so on and so forth. And to do that, we are basically relying on a global trading infrastructure that we have been building for the last 3 years. This is fully cloud native, microservices based in Kubernetes. We rely notably in terms of code base on Node.js. We have some Go with Python, and all this infrastructure is leveraging private backbone to connect the multiple regions that we are operating for. So right now, typically, this looks like running a few thousand pods in various regions, more or less in collocation with the exchanges. We aggregate 4 or 5 billion data points per day that we harmonize for every single exchange. We store that in BigQuery mostly, so cloud native SQL databases with GCP, and we execute anywhere between 2-3 million, sometimes slightly more, orders on behalf of our clients and our proprietary trading activity. The beauty of the financial ecosystem is that it's simple. Traders are always looking for the most efficient way to trade. And in that sense, we have never invented something that is more efficient to make a market than an order book. At what price do you want to sell? At what price do I want to buy? And we see if the orders can match or if they don't. And if they match, there is a transaction. You sell me, I sell you. If there is no match, then the order book is open and everybody is patiently waiting. So obviously, historically, that has been done mostly on centralized exchanges for various number of reasons that we will tackle. But this is mostly because of scalability, because we have never invented nothing better than an order book, but obviously an order book consumes a lot of computational power, gas fees, if we look at it from an on-chain perspective, for all reasons that we can imagine. It's about putting orders, canceling them, then putting them back again, and doing this at a high frequency, meaning potentially refreshing orders, 5, 10 orders at the frequency of basically once every second. So we believe that decentralized exchanges ultimately with order books will be the best and the only viable alternative. And if we remember historically, one of the first DEX, if not the first DEX, what was an order book based one on layer one. And it was interesting because putting an order or canceling an order was costing dozens of dollars. So in the meantime, and in the history of decentralized finance, obviously we've invented tricks to allow on-chain trading, but these have only been tricks, and that's why ultimately we are convinced that orders will come back. And yet, due to the blockchain limitations, it was not efficient to trade on-chain via an order book at scale, because you have low transaction per second, you have low transaction speed. If you look at the block time of Ethereum, and as I said earlier, the gas fees were insanely high. So refreshing an order book like you would do it on a centralized exchange was virtually impossible on-chain. You cannot put 5 orders and cancel them at a frequency of 1 hertz or sometimes even faster. The Uniswap V2 model introduced obviously a new paradigm because it solved the gas fee part, because one could only put the liquidity once and then we could just wait and for that liquidity to be taken. And obviously it raised a significant amount of challenges on the impermanent losses side, capital efficiency, which has been partially solved by the Uni V3 model. The Uni V3 model, which is just a derived version from an order book, if we think about it. And the only difference is that when we are crossed, when an order is being taken, instead of a regular order book, the order is taken out. Here, the order will go on the other side. So if I am seller and I'm being hit, basically I will go on the buy side. And we see examples, every day of traders looking to hit the most efficient liquidity. One of the examples was obviously on the BNB chain when Pancake introduced the V3. Obviously, all the trading became much more efficient, and that's why we are convinced that ultimately, when order books will be viable at scale on chain, this is the only model that will remain, and we are probably very close to that. The very simple reason is that there is likely, it's only a matter of time until now done order book. Obviously, this is because it is significantly much more efficient, but it's also because of the everything that is happening on the layer 2 side, and that's why we think that the Caro, notably, when we combine, the high throughput, the low transaction fees, and the high transaction speed, we probably solve the equation. And we've seen, some of the biggest DEXs on chain, obviously, relying on Starkware technology, and that's why we were pretty bullish. At Flowdesk right now, we are reviewing everything that is happening in terms of opportunities, and obviously there is many interesting things that are happening. We are convinced that once there is a viable decentralized exchange based on order books that offer a satisfactory trade-off between the decentralization and the efficiency, this is truly when the DEX migration of liquidity from centralized exchange will happen. Because if we think about it, if we look at a centralized exchange from a decentralized perspective, this is basically a highly low transaction fee venue. It's a fraction of a cent. It's virtually free to send an order on the centralized. And obviously, in terms of governance, the centralized exchange can do whatever they want. So we are probably, few months away, anywhere between 12 to 24 months, until we see one of the biggest trading venue arise, and that trading venue will likely be a DEX, and it will likely be based on order books. And that's why we are looking at initiatives, we are looking at projects who are trying to solve these equations, and we think that Caro is probably one of the best language to do that. I guess I'll stop there. If there are any questions or specific topics, we we want to answer.
Yeah, thanks a lot, Guilhem, for the amazing presentation. I think also like yeah, looking at the back, like IMM was there to tackle like two main problems, like low liquidity and high computational cost. And I think like definitely when you get rid of those two, as we like more and more liquidity are coming into DeFi, we've seen like in 2020, I think it was like 60 million during DeFi summer at the end of DeFi summer. And no, like we had like a big bump last year or 2 years ago at like 150 billion, and now it's kind of like stabilized at like 50 billion, which is like yeah, still 40 times higher as like 2020 in only 3 years. So like liquidity problem is like definitely something in the back, and I think I know we're looking at scalability problem. Um, and yeah, but like one also like because like I also truly believe that order books is here as well to emerge into the DeFi space. But also one nice things that we have with IMM is like anyone on earth can provide liquidity to the pool and then grab a percentage of the fee, because that's also like if we look at like traditional finance, liquidity providers of market makers are restricted and like most of the time super wealthy people. So as well like looking at like okay, like Flowdesk for example, because you care so about like regulatory uh, um, yeah, being like regular or like always licensed. How do you as well like uh, trying to make this being an LP to the market makers more openly as well in the future?
Yeah, I think it's so. The first thing I would say is yes, one of the big pros of the UniV2 model is that virtually anyone can be a market maker. But this is done at the cost of highly incentivizing this through fees that are potentially extremely high, 30 BP, 50 BP, 100 BP, or whatever. The only way to make liquidity cheap is to have liquidity that is very sophisticated. And to have someone provide liquidity 1 BP away from the mid on BTC, USDT, or whatever, need a certain level of sophistication with low latency internet, special type of pricing models and all of that. So there is no magic. At the end of the day, the models and the people and the people who will trade and who will provide the liquidity, including on chain, would be the most sophisticated player. And obviously, there is a room in between a highly sophisticated market maker and individual wanting to provide their liquidity. At Flowdesk, we also have a strong vision for non-custodial market making as a service, which is essentially a token issuer, or you could argue anyone, putting their liquidity into a smart contract and having that smart contract managed by a more sophisticated player, including the smart contract potentially, and then sharing the fees. So I think at the end of the day, I picture a world where we would have a similar setup where everyone could bring in liquidity. The only difference versus today is that liquidity won't be passive. It will be actively managed, either again by a centralized actor, a decentralized actor, fully automated AI, who knows? But yeah, this will be the next step. And obviously oracles will play a huge role into all that. Because everything will have to be computed on chain. But yeah, I think following that first primitive of having an order book on chain will soon emerge. Some smart contracts where you just say, hey, I want to quote 5 BP away from the mid on this pair, and I want to put a certain fraction of my liquidity. When I get hit, I go more on the sell side. When I get hit again, I go more on the buy side. With certain rules, and everything will be automated. On the regulation front, it is a huge question, particularly in the current context of the US regulator not being probably in the best position to accept innovation, I guess I would say. So there is very likely a step in the middle where we will see permissioned, decentralized exchanges. I have a strong conviction that tomorrow, every single exchange, centralized or decentralized, but that's already the case for centralized, will have to be permissioned to some extent. And we will need to be able to prove who has been able to buy what and why, and so on and so forth. For the very simple reason that the financial world lives through the rule of anti-money laundering and all of that. And obviously, this is not going to change. So there is a need for a certain level of traceability. So at the end of the day, it's a bit unfortunate to say, but I don't think the world would change significantly in terms of model. It's just that it will be decentralized. All the trading will become decentralized, which is an incredible and huge improvement over what we have today from a various number of perspectives. But yeah, very likely we will rebuild what has been built. We just add the decentralized fashion, which will provide already a terrific amount of use cases, which we are obviously very enthusiastic about.
Yeah, thank you. Yeah, I believe that as well. Like at some point, KYC or wallet won't be an option anymore. Um, Definitely. Yeah. So I think that you made a good point of like allowing and mostly like building kind of like a market making as a service as you doing it today, and like bringing that on chain in the future to feeding like order books. So this was also like allow probably like anyone who is obviously like KYC and licensed and um, to provide liquidity into this market. Um, so like do you, because like order books you talked about like 12 to 24 months period of time, we can already see those like active liquidity managers like such as Gamma or Arrakis, who's been like quite a big traction lately. Um, do you also think that this is just for temporary, or do you think like this kind of thing like will last as well, and we'll have like some order book based decks and still have like kind of like AMM based decks, or maybe like a mix of the two, where we have like order books based decks, but where like those liquidity on those order books are feed in the pool managed by market maker like active liquidity management, like also say like market makers.
I think it's definitely the last scenario that you mentioned that seems to be the most likely. On the fact of having actors who are able, like the one you mentioned, to fully manage and to take over all the management of liquidity, I don't think it is in the realm of possible before a very long time. And the reason for that is, although I'm a huge believer that all the books will arrive very fast, I think we are very far from seeing the end of centralized finance. Unfortunately or not, it's always a matter of perspective. But one of the key comparative advantage of market maker today is that they have this bridge between all the centralized venues and the centralized and the decentralized venues. And tomorrow projects will need an actor who can be global. And being a global actor means obviously being on these exchanges. And to be on these exchanges, obviously you need to be a registered entity and corporate verified entity and all of that. So I think I picture more a world where there will be centralized actor who will have a mandate to do a certain type of operation, and then it will be picking cherries basically, and which fund manager, arguably that is, and that's why it goes way beyond liquidity for projects. You would like to pick as an LP, but it's hard to say, and ultimately, yes, very likely everything will become fully on chain with permission and a whole bunch of stuff we discussed previously. But if we are very objectives, looking at the way finance is structured, looking at the way institutionals trade today, we are 10, 15 years away from that. It will take maybe decades to get there. So yeah, finance is a bit boring because we are always reinventing the wheel, but to do more or less the same thing. But yeah, if we want to be pragmatical, and if we look at the next wave of innovation in crypto, which is tokenization. Let's be very honest. We see it with multiple projects tokenizing, U.S. treasuries notably, or tokenizing money market funds and all of that. This is basically the first real crypto product that will have a massive use case, in my opinion. And this use case will be leveraged by traditional finance actors. And these guys will have standards that will be very far from the one we are trying to create within the crypto space. And ultimately, of course, it will converge, but it will take probably another 10 years. So I think right now, the the way I think we should do things is with a lot of pragmatism. It's not about centralized versus decentralized finance. We are the best proof with Flowdesk, as we are quite active on both. But we should try to contribute to building this bridge, and that's why on our side we are trying to build these innovative products. That's why we are regulated. That's why we are putting a strong approach on transparency, giving a whole bunch of analytics to the projects we work with, so that they can do everything themselves. So having that more technological approach. But yeah, it's a complex topic because again, we are supposed to be in the middle of the bear market right now, and the use cases needs to be built. It's been 13 years that we are waiting for massive use cases that we don't have yet, and I think we should not over complexify things. A good old permission order book running on the layer 1, layer 2, whatever, permissioned, with all TradFi actors coming in and be able to trade efficiently without without having all the settlement constraints that we have in traditional finance. It's already a 10x improvement over what exists right now in finance. And I think these are typically the type of use cases that we should focus on. But one step at a time. We're going to build the order books first. We're going to see some shift to these models in DeFi, and then we will see what next use case we can bring on.
Yeah, thank you. Yeah, I think that's is like one of the best that like the future may take us. Um, does anyone wants also like to react in the chat in the discussion? Like, feel free to ask question here. Like, yeah. Um, so yeah, that's like, because you're talking about like a permissioned order book and basically improving the current state or infrastructure of traditional finance, and bringing it on chain to have it like a more efficient and transparent settlement infrastructure. Um, but so you think as well that because that's also like a big as well big talk and big thing in DeFi, like how can we incentivize and bring the institutional liquidity on chain into this open world DeFi. Aave, for example, has built Arc, who is a permissioned peer-to-peer lending borrowing protocol, who's basically only allowed certified and licensed actor to participate in. So do you think that the DeFi world might be divided into two main world, where we still have that open world where any actors can be part of it, and that permissioned world leveraging both same technology, but where only permissioned and licensed actor can operate in?
Yeah, that is very likely. So we were part of the ARC initiative. It's very interesting that you raised this point, because this is a clear example how complex it is, because institutionals have a certain level of standard, I would say, and right now what we are doing in crypto is really far from that. And at the same time, we have an incredible technology that is innovative, that is non-custodial, which is an incredible use case for anyone in finance. And it's really a chicken and egg thing at the end of the day. If we look at ARC, the TVL was non-existent. I forgot what the exact number was, but I think it was in the $25 million magnitude or order of magnitude. And we were the first. We were disappointed of not being able to lend and to borrow in this protocol. So I think it does seem that the world we are right now is basically a sandbox for building the technology. It's very open. We can do everything. We can progress fast. We build all these utility tokens, which sometimes have good use cases. Sometimes they have zero use cases. It's okay. It's just a sandbox to build everything that we have to build. But yes, at the end of the day, when the TradFi actor come in, and obviously we are talking about another order of magnitude, in terms of potential TVL and market cap right now. Crypto is been hovering anywhere between 1 trillion to 3 trillion in the previous bull run. We're talking about an order of magnitude of 50x, 100x higher than that with traditional finance. So it's still zero what we have been doing. And to get these guys in, yes, we need to adapt to their standards. We need to be brutally honest about it. And it's very likely tomorrow that every single venue will have basically a permission and an unpermission mode. And we could argue at some point, depending on how the regulation is being enforced, that everything will have to be permissioned. It's the big debate, is crypto going to take over the world, and regulators will not have a chance, and in the blink of an eye they will wake up and it just happened. That's what we thought, I think for some time. It does seem that obviously today this probability is probably lower than it could have been 2 years ago. Is this something that we want? To be very honest, I don't know, because we've seen lots of abuses in the past year, and obviously a very libertarian world is probably bringing that type of abuses. So it's a philosophical question at this stage. But until then, the two worlds will have to coexist. But that will be done only when the technology is matured. Right now, the technology is not matured because order books are literally starting to take off on DEXs. So again, as I said, it's probably probably a matter of 12 or 24 months until we see it. And then once we will have that, it will be only the first part of the rocket, because we need to have the use cases. And tokenization of treasuries, notably, as I said, is very likely the one that will come right after. So that's why I think more than ever, I picture, and I have always been quite bearish, about the institutional prophecy of having all these guys coming into crypto, because you see with my background, I was like, no, but these guys will never come in. It's by any order of magnitude matching their standard. With what we are doing both on the tech side and on the tokenization of the assets, and there are obviously dozens, if not hundreds, of startups who are trying to get this done now, I picture a world where they could find their interests. And when that happens, the increase in market cap will be incredible. It will not be organic. We're not going to switch from 2 trillion to 20 trillion because Bitcoin has done 10x. It will be tokenization of assets coming into crypto. And I think these times are extremely exciting, because we will see, hundreds times more like volume, cross-chain activity, interoperability will be extremely important, obviously. So yeah, but these are just fun times that are ahead of us. And yeah, the technology right now is in all-time high. That's what we should remember ourselves every day. But there is a lot to do on every single front to make it happen, and it will take years to get it done.
Yeah, thank you. So maybe now to get a bit back to the hackathon, like you are an amazing sponsors of this hackathon, and maybe as we are like 12 to 24 months to order books on chain, what are for you the steps that people can create and can build today to go through that order book, and maybe what is possible to do today, and maybe like what would you do in that period of time that separate us from today to that 12 to 24 months?
I think we should go back to the basics. For some reasons, the first use case of the first big use case of order books on chain was for perpetuals trading. But I think we should just go back to the beginning, to the basics, and just build the best Uniswap competitor that can exist. A simple spot exchange where anyone can post liquidity, very efficient, little, minimal, or zero fees, really replicate literally what is happening on the CeFi world: 0 BP for maker, 2 BP for taker, that kind of things, and then start building the primitives on top of that. The first one would be margin trading. You can post collateral, you can borrow, and then you can hit into the spot markets. And then obviously, eventually there is the derivatives component that can come into it. And yet, surprisingly, I'm surprised that there has not been yet an actor in the past months who has emerged as very significant, DEX spot trading exchange based on order book. And I'm also surprised that Uniswap, notably, if we look at their V4 that they recently, released, is not taking that approach of saying, hey guys, we're going to do very simple stuff, just spot order books, and boom, that works. And obviously, the constraints of Uniswap are explainable. They are obviously operating on a wider range of chain where the fees will hardly legitimate the use of limit orders into order books where you pay 7 cents on Arbitrum. It's not very viable to run an order book there. So no, I think the path is very simple. Build this very simple spot exchange, have a native token to incentivize liquidity. Many have done that. Whatever fees you pay through trading, whatever volumes you do, you get a substantial amount back in token. Building the governance around that to build what the next features should be, and yeah, that sounds like a pretty interesting path. And if we can have the permission component on top of that, this is beautiful. That would be very useless, let's be honest, because again, it's going to take years to get it done. But yeah, that would be more or less how I would do it.
Okay, awesome. Thank you. Is there any question in the chat as well? So yeah. So just a quick recap as well about the Flowdesk bounty. So they are in two bounties. So first in the general tracks, who will be reward all like best project has been building during this hackathon, and then a second bounty in specified bounty category where he will give and reward market making credits for your token or future token as well, for the best DeFi and DeFi protocol and DeFi project. All information as well on the TakeI platform. If there is no question, yeah, there is no question. I think we can wrap up. Thanks a lot for your time and this interesting talk. It's always like cool and enriching to have the point of view of someone who's like strongly believe into that open permissionless world, but can like also that reality that bring back and catch us where we still need to be permissioned and yeah, licensed and regulated. So thanks a lot, Guilhem. I will leave you to have the final word.
Thank you. Thank you so much for having me. And it's such a pleasure to see these initiatives, of trying to build. We have the right to be wrong. We're not going to go through the entrepreneurial journey that Flowdesk was, but there was many attempts, and it's about attempting, and that's also what we want to reward. Build simple stuff that works, and don't be afraid to fail. And if you are trying to solve these topics of bringing on-chain liquidity on-chain through all the books, in the Starkware ecosystem, just reach out to us. We are interested, to follow the journey. We are interested to follow the progress. We are getting a lot of exposure to various ecosystems, and because due to the agnostic nature that we have at Flowdesk, where basically we need to provide liquidity everywhere. So yeah, we will closely follow. We are excited about the future we bring, but again, closing on a maybe not so optimistic word, there is a lot of work to do. Let's be very frank about it. So one step at a time, small iteration, we make stuff that works, and then we can move on. Thank you so much for having me.
Thanks a lot, Guilhem. Goodbye, everyone.
Bye.